Brian Turner here with CCS. As we were talking earlier, I've got a couple of good friends of mine here. Dusty Anderson, Senior Vice President of First Dakota National Bank, and Austin Havlik. He's the Vice President of Ag Lending for First Dakota National Bank. Guys, thanks for coming back.
Thanks for having us.
Truth be told, they never left. But anyway, what we want to talk about in this segment, I think, is important because both Dusty and Austin touched on it, are the different types of loans that are available to everybody depending upon your situation and your goal. We talked about what is the end goal when as you think through your operation. What do you want it to be? Are you bringing somebody back, son or a daughter trying to get into it? So guys, that's what I want to talk about this time. Can you just kind of give us an overview of the type of loans that are out there, and then we'll get into I guess the personal circumstances as far as what loan might be best, and how would you guide us through that?
Sure. Well, First Dakota provides just conventional lending, but with that conventional lending, we participate. We can be involved with FSA. We were the first approved FSA guaranteed lender in the nation, and so we have a lot of different avenues that we can go down to provide funding and financing. And so, there's EQIP programs, there's the 319 programs that we talked about earlier. But the most important thing to know is that every application, every operation is different. So bring in the basics, 3 years tax returns, 3 years financials, and then we'll help figure out what is the best fit and what is the most financially
What makes sense?
feasible.
Okay.
Both South Dakota and Nebraska Department of Agriculture, I know, have some great programs there, and we can involve all of them.
Okay.
And it's just a matter of what's best for the operation and the applicant.
Yep. And another thing to consider is what the cash flow for the expansion is going to look like, and that's different based on what route you're going down, whether it's a cattle feeding barn, cattle calving barn, if you're doing some custom feeding, and then all the different types of hog deals out there. So South Dakota State, Nebraska, Iowa, the extension offices have very good information to tap into as far as looking at cash flows, but it's just very important to be realistic and looking at what things might come down the road. Are there some things on these barns that need to be replaced every so often, and look at that in your cash flow. But the cash flow will definitely help determine what kind of loan you're looking at, because and along with Dusty had touched on a down payment earlier, but that might change what your what your payments are going to look like going forward. So there's just that's a big thing that will help us or help you figure out what type of loan you're going to need.
And at First Dakota National Bank, we also have an opportunity to go on the secondary market. I mean, we could literally lock in your interest rate for 15 to 20 years, depending on the operation. There's qualifications for that, of course, but we have financing partners that will do that and take advantage of the secondary market. Historically low rates right now.
Yeah.
And even if there's part of a refinance involved,
Just going to ask about
we
that.
could do that.
Yeah.
Absolutely.
Yeah.
Yeah. The secondary market is a great tool for us.
Is it?
And we can lock in, 20-year, 25-year rates, and they're very attractive and very competitive. We have to compete with everyone in the lending business every day. So
I was going to say there's a lot of voices out there for people's money, right?
absolutely.
Oh, yeah.
Yeah.
So, as we talk about this, whether it be a primary market or a secondary market, does a lot of that have to do, so like I said, we were talking last time, kind of a financial advisor. First of all, you probably want to know what my end goal is what do I want to do? How do I want my operation? And not just if I wanted to bring my son or daughter back, but what also does my operation look like in 5 or 10 years, where there'll be other, let's say, confinement opportunities or another just barns on the property, or maybe another other land. You probably want to kind of get a feel from me of what I'm really thinking, and then so if I'm in a specific loan program today, let's say this year, because I'm getting into, I'm building a barn, am I locked into that, or will that be something that you'll review with me as we develop our relationship together, what does that look like to you guys?
I think it's important to have a goal so that everyone knows what direction you're going instead of just forward.
Okay, yeah, that's a good point.
But plans can change.
Yeah.
You know, I mean,
Very
with rates where they're at, nobody's seen that coming. You know, so there's refinances.
That's a good
We're doing a lot of those. There's just things change. Different industries pop up. Different opportunities pop up. So I think just because you maybe lock a rate in or something doesn't mean that the plan can't change down the road, and that the operation might take a different turn, or maybe that really worked, let's double down.
So are you is your teams pretty well versed in these different programs that are out there, whether it be EQIP or 319, and how those can work together, conventional loans, so that way you can take a look at the overall operation and say, okay, this is where we would like to put you in?
They are.
Are they?
Yes.
Okay.
Yeah, most all of us are very fluent in the different programs and options that are out there. So just
That's a
feel
lot
free
of reading every day, because what I'm seeing, those programs change on a fairly regular basis, right?
And Austin alluded to the rates, and if say you lock into a 30-year rate and rates for some reason go down, our secondary market provider offers conversions where you can go in and convert those rates to a lower term and those kinds of things, or if you depending what product you pick, some have a small prepayment, some have a 5 or 7 year prepayment, others are fully open. Do what you want.
So, but is it up to me though to be tracking all of that, or will you give me a call, say, hey Brian, it looks like interest rates are dropping, maybe we should get you in here, let's take a review, let's review your entire operation, your package.
Yeah, so I definitely have been calling a lot of my customers and letting them know where rates are, but I think I think at the end of the day it's really on the producer or the borrower to being aware of what's going on, and it's your financials and your operation, and we take some ownership in that as well. But at the end of the day, you really it's just you really got to be on top of it. And when there's opportunities like this, it's no different than an opportunity to market your grain for a higher price or your cattle for a higher price or anything. It takes a lot of management to be successful in agriculture, so you really got to stay on top of those things and take advantage when you can.
Probably a good relationship or partnership too, right?
It is. It's all First Dakota. We strive on and really stress having a relationship with your lender and knowing, what to ask, how to ask it, and what's your expectations, because there's an expectation both with the borrower and the lender, and
That's a good point, because now I guess if I'm going to do some business with you, I got to move all my money out. In my grandma's money that she left me, I can move it all out, all those accounts, and give it to you, right?
that's not really the case. We would accept it, of course.
You would or wouldn't?
We would.
Okay.
Yes.
Yeah.
We would accept it, of course. But there's opportunities out there that if you have a relationship with your local small town lender, if that's who you want to continue to bank with your line of credit or something like that, these expansion operations are able to separate and finance solely that operation. Most of them are coming in like a swine confinement barn would be on a 3 to 5 acre deal, and you survey that out and you'll have your mortgage on that, and that operation will be separate. And most operations are forming their own entity and taking it to where that finisher unit or that cattle confinement barn has its own entity business structure.
Oh, really?
And that
that's
will
good news.
limit some liability
Yeah.
with the local or the normal farming operation or where mom and dad are at or
Okay. That's good to know, because in that way that then can help me, on the tax side potentially and liability side and break those things out. Well, that's good. I'm glad I don't have to. While I love you guys to death, I just don't want to bring all my money over.
I understand.
But you said something earlier, Dusty, when we were talking before we started. is that some of the local banks may not be able to financially handle, not talking bad about it, but they might not able to financially handle a large-scale expansion financially. Is that correct?
That's correct. It's called lending limits, and some of the smaller town local banks will have certain lending limits based on their capital and their ability, and they are just absolutely fine to do the lines of credit and maybe some cattle notes or some hog notes or something like that. But if you get into these larger expansions like this, you're probably looking at 800,000 minimum, and so you will reach their individual lending limit for that person. And so then they have to go and participate out or do something different like that. We're here to say that we look at it as an individual entity and could finance just the expansion.
That's great, because you like that opportunity to diversify a little bit. Because when we're looking at, because I'm probably coming to you because I'm probably already an established producer of some kind, whether it be crops or something like that. So as we were talking here, I just had a question, Oz, maybe you can answer this, is so I'm going to, I've got a successful crop operation going, and I like that. But boy, these pork guys are coming to me, and I've got this whole layout here, this whole pro forma. Can I come to you and say, Austin, help me look through this, and does this make sense? Is this good flow for my operation?
Right, yep. So, we have customers that are already into some of these barns. Say you're looking at, talking about a cash flow from an integrator.
Mm-hmm.
And so we can kind of see, what have we been seeing from, realistic cash flows from what our customers are experiencing. And then, we've seen, cash flows from several integrators, so we can kind of help do a side-by-side comparison and say, this is really what that manure is worth. Or this is really what you're going to get back for your labor in that barn, you're in the right range for a lease per head space.
Okay, and it helps that you're. It sounded like what we were talking last time, and we'll get to talk about that in just a minute. But it sounds like where First Dakota National Bank is at across a couple of states. Depending upon where I want to put it, you would probably have some relatively good data, I would suspect. If I'm down here in this part of the world, or as compared to South Dakota, there's probably some differences you can take a look at on all of that. Well, yeah, we see manure might be running approximately that, because you'll have real hand experience talking to your other clients, right?
Oh yeah, absolutely.
Well, that's great. Well, why don't you tell us a little bit more about First Dakota National Bank?
I'll kick it off. First Dakota is headquartered out of Yankton, South Dakota. Was the first chartered bank in Dakota Territory, I think in 1872. Dusty touched on, we are a preferred lender through FSA, and we were the first preferred lender in the nation, and that's a status that we keep up each year. That's definitely helped us a lot working through FSA. We also have, I think Dusty touched on that too, access to the secondary market. We have a division of First Dakota called Dakota Mac, and that's how we have access to that secondary market. Another thing that Keep Farmers Farming division of First Dakota is estate planning, transition planning, maybe some best business practices, things like that. Just a consulting division of the bank that is very helpful for some of our customers, and some customers are producers, borrowers that don't borrow from First Dakota. They do a lot of work through South Dakota, and I'm sure some in Nebraska as well.
Cool. Exactly. We also, First Dakota offers a beginning farmer program, and we're very proud of that. You don't have to be a customer. It's a short kind of crash course on financing, production, management, and we bring in some extremely talented speakers and have a very good program, and it's been a very successful program that we offer every other year.
Oh, that's very cool.
And usually limited it to a certain number of applicants, but
so does a big garden count? If I have a big garden, does that count?
Not today.
No.
That's this close. All right, guys, thanks for coming by, and we'll be talking here in just a little bit.
Yep.
Appreciate it.